Hello friends, welcome. Friends, just couple of days back, RBI has come out with this table which is foreign direct investment inflows on a monthly basis. So this number was released just few days back, and the data that we have today is till March 2024. So you can say that the complete financial information regarding FDI is now available before us. Now you might see a lot of people have done various kind of videos on FDI and talked about the decreasing trend of net FDI in India. So because this is a complex subject, so what I thought, friends, is that I will take you through the details of this table, which is difficult to read in this form. So what I have done is I have created a dashboard which captures the line items of the table in the form that you see in front of you. So which is easy to visualize and understand. So what I'm going to do in this video, I'm going to take you one by one the line items and the constitutions of these line items as regards to FDI in India, and take you through the details as to why FDI numbers have changed over a period of time and what are the line items responsible for it. So I think this will be very, very interesting, friends. Just be with me and you will be able to get a good insight about the number. So the way the table has been created, let me explain to you how the table has been created. So this table has got two different metrics to choose from. One is the absolute value, which is in $1 billion, and there's a ratio. What is this ratio going to tell us? The ratio is basically going to give us a reference point from the data which is on the starting point of the table as you go forward in time. So let's say, let me just tell you again. For example, this number of net foreign direct investment in FY12 was $21.9 billion, which you see here. Now, this number, which is $10.6 billion, this is going to be a certain ratio of this number, which you can see by choosing this option. So once you see this number is going to become 1 because this gets divided by itself, and this number, which is $10.6 billion, is going to get divided by $21.9 billion, and this number is going to come out as 0.48. So this gives us, there are two different pictures that you are able to see, not only from the various line items which constitutes this whole table, but also gives you a trend which you can see, which is difficult to visualize otherwise if you don't have this ratio. So I have both this number in front of you to understand the overall picture. Then what I have before you is the main line items, and these main line items are made up of sub line items, which I have shown here because every line item has been marked with a serial number. So 1 to 24. Now every line items is a aggregation of the line items which are below it. How the aggregation is taking place is shown here. For example, if you see here, the net foreign direct investment number, which is right in front of you here. Let me just take my pen. Yeah, so net foreign direct investment number, it is 2 minus 14. What is 2? 2 is direct investment to India, and 14 is foreign direct investment by India. So net foreign direct investment is a subtraction of 2, which is direct investment to India, and foreign direct investment by India, right? So whatever numbers that you see here, so if I take the absolute value and I pull out the absolute value, this number is going to be a subtraction of, let me just take the latest number. The latest number is what? $26.5 billion minus $16 billion, and that's why you get $10.6 billion. So $10.6 billion is the number which you see, which is a subtraction of $26.5 billion minus what is 14, which is $16 billion. So that is the net foreign direct investment to India, and that's why this number is 10.6. Now if you look at over the years from FY12 till FY24, the net foreign direct investment numbers has remained steady, and it has really grown till FY22. You see that it was $29.9 billion in the initial stage, and FY22 the number actually went up to $36.6 billion, and then in FY23 the number has gone to $28 billion, and now in this financial year the number is dismally low, $10.6 billion. Now friends, what is the reason for that? That is what the purpose of this video is, not to basically tell us that $10.6 billion, the number actually has gone very, very low. Why this number is low? And that is very clearly visible from this table. Now, this table, as I told you, constitutes direct foreign investment by India and to India. Now, direct foreign investment to India is further broken down to two different line items. What are those line items? Line item 3, which is gross inflows of investment, and line item 11, which is disinvestment. That is taking out investment out of India. So you have to subtract the line item 3 with line item 11. 11 is the repatriation, which is disinvestment. Now, if you see the gross inflows of foreign direct investment to India, that number hasn't changed significantly, though it increased till FY22 to $84.8 billion, and then in FY23 and FY24 the number has remained within $71 billion. So by looking at this number, the gross inflow of foreign investment in India, you will not get the picture that why net foreign direct investment in India has gone down. So you have to look into the disinvestment row. Now, if you look at disinvestment, you will notice that the disinvestment numbers actually have gone significantly higher in FY24 to $44.4 billion. So the foreign investors are taking money out of India. So they have taken a money of $44.4 billion, which is almost like 1.5 times than $29.3 billion, which we saw going out in last financial year, which is FY22. And that is why this number, net foreign direct investment in India, has gone so low to 10.6. So the net, the main reason why the net foreign direct investment in India number has gone so low is because the foreign investors are taking money out of the country, which is at a higher rate compared to what they did in the earlier years. So that's the story which is very clearly coming out from this analysis. Now, in order to just get a reference from how these numbers have changed over a period of time, let me take the ratio. So if I take the ratio, this gives us a very clear picture. What this ratio is telling us? This ratio is telling us that what this number over the years, which is from the reference year, which is the starting column of this table, how it compares with this reference year. For example, if you see net foreign direct investment in India in FY13 has been 0.19 times of what we saw in FY12. Similarly, in FY14 it is 0.99 times, and then it has increased, and it increased till up to 2.10 times in FY21, and in FY24 it is 0.48 times what we saw in FY12. So now if you look at the disinvestment number, the disinvestment number has increased significantly, and it is now 3.27 times what you saw in FY12. So people have been taking money out of India more than what they are putting inside, right? Now let's look at let's look at the subcomponents of gross inflow of investment, which constitutes two different actually there are three different items which constitute gross inflows, which is 4, 9 and 10. What is 4? 4 is equity investment. And what is 9? 9 is reinvestment earnings, which are basically whatever earnings that you have made through your investment, they have been reinvestment in the market. And what is 10? 10 is other capital. So if you look at these numbers, you will notice, let me just take the absolute numbers, so that first look at the absolute numbers and then we'll look at the ratio. So if you look at the equity part has gone a little low. It was $35.9 billion in FY12. Now, if I take the ratio, this number actually has increased to only 1.28 times what we saw in FY12. So there was a significant increase in FY21, and then thereafter the number actually has decreased. So what is equity investment? Equity investment is investing directly into the shares of the company. more than 10%, and for a long period of time, not in the stock market. So that's the equity investment. Then what is the other investment, which is the reinvestment earning? The reinvestment earning has increased over a period of time. So if you see here, the reinvestment earning, which is here, it has increased it has been increasing over the period of time, and now it is almost like 2.38 times, almost like the highest what we saw in the earlier years, right? And then we have the item number 10, which is other capital. The other capital item has increased, but it has not. It was highest in FY 20, but it is not a very big item, because from an absolute point of view, this item is very, very low. So therefore, we can safely ignore it. So if you look at the other capital item, the other capital item is where is it? Yeah, this is from an absolute point of view is not a very big line item, so we can just simply ignore it. So summary here is that as regards gross inflow of investment is concerned, we are seeing that the equity part increased and then it got down, and then we have the reinvestment earning, which also constitutes a very large proportion, and then we have other capital. So that is regarding this item, which is gross inflow of investment in India. What is the other item which it is made up of? The equity part. The equity part is broken down further into 4 different items. One is the government FIPB approved investment. Another is the RBI channel investment. Then we have acquisition of share, and then what is the last item? Last item is equity capital of unincorporated bodies. So the RBI channel investment is the major chunk here, if you see, of the total gross inflow of the equity investment. So you'll find that this is the big ticket item, and this item actually has increased till in FY21 to $51.6 billion, and this year it is $31.8 billion. So this kind of tells us the complete story. As regard repatriation is concerned, there are 2 different items. One is the equity, and another is the other capital. The other capital item is very low. So you just, as far as equity is concerned, we find that major repatriation actually is taking place as regards equity, which is $41.3 billion compared to $27.1 billion, which we saw in last year. Now, foreign direct investment by India, which is getting netted out from direct investment to India for arriving at this number, this line item, which we saw in the top row. Now, foreign direct investment by India numbers actually have been decreasing from FY12. Now, then from FY18, the number has been steadily rising, and it has remained around $17.6 to $16 billion, right? So this number has not significantly increased. It has remained steady from $11 billion, $17.6 billion, $14 billion to $16 billion, right? So this is not a very great contributor. So the main contributor is repatriation, right, which we saw. Now coming to portfolio investment. Now, portfolio investment numbers actually have been going undulating with time. So if you see here, in FY12, the number was $17.2 billion. Then the number went up, then it went down. Then FY15, the number was $42.2 billion. Then it went down, became negative. Then FY17, it is $7.6 billion. Then FY18, $21.1 billion. Then it basically went very, very low during the COVID period. Then in FY21, the number went to $36.1 billion. Then the number went negative to minus $16.8 billion. And this year, the portfolio investment number is $42.2 billion. So what it basically tells us? It tells us a very different picture. The money is being taken out as regard disinvestment of FDI, which is long term. What the foreigners are doing now is they are putting more money in short term stock investment in India. The gross inflows, as far as FDI is concerned, that number has not changed significantly, but the money has been taken out, and that's why the net investment, the foreign investment number has gone down. However, the portfolio number this financial year, FY24, the number is significantly higher compared to what we saw in earlier years. It is at par with which we saw in FY15, just after BJP won the election in FY14. So this number is absolutely at par with 42.2. So they are equal. So in India, summary of the situation is India, the foreign investor are making more investment in portfolio as a portfolio investment in the short-term stock market compared to foreign direct investment. And that is why the total investment numbers do not look significantly bad. So if you look at the total investment number, and let me take the ratio, because that will give us a very good picture, you'll find that if I take the reference in FY12 as 1, the number that we see in FY24 is 1.3 times what we saw in FY12. Though numbers have been fluctuating a little bit here and there, and we saw a peak of 2.05 times in FY21, but this year the number is 3.35. And that's why you don't see a significant change in our foreign exchange reserves. Now, though the FDI numbers are very, very low, it's a matter of concern, right? The number is 0.48 times what we saw in FY12, but the overall total investment number is 1.35 times what we saw in FY12, and that's why our foreign investment kitty, that is the reserves that RBI maintains as foreign exchange reserve, that number has not fallen because of this. So India's story is more kind of anchored on the stock market success, and that is one of the reason why the government is very, very careful to ensure that the stock market valuation does not go down. So they are trying to, their policies, and they are trying to maintain the stock market at an elevated level, because if the stock market, India stock market goes down, then this portfolio investment number can go down, and with FDI going down, this number, the total investment in India will also go down. So I think you probably understood, friends, what the storyline is, and just to give you a little bit more depth in this story, let's zoom in and see what happened in a quarter level, because that will give us a little bit more insight. On a quarter level, if I go in absolute and I take the absolute numbers, you will find that on a quarter level, the net foreign investment, direct investment numbers have been dwindling down. See, the number actually has been going down. And if you compare with FY21 Q2, you see that these numbers have been steadily going down. And then if you look at the portfolio investment numbers, it has been undulating, but the number has not drastically changed. And in the last 4 quarters in the financial year, the starting quarter was $15.73 billion, then it will go down, and it is $12.01 billion in FY24, and FY24 Q4, the number is $9.53 billion. So this financial year has been pretty good as far as portfolio investment is concerned, right? Especially by FIIs. And that is why we are seeing a very good total investment in India, right? So this is regarding the quarter level view. Now, if I take a monthly level view, let me just take a monthly level view, and that will give us so this year from a monthly level view, you see that in March, our net foreign direct investment number is actually negative for the first time. Not for the first time, but for the first time, this number actually has significantly dipped to minus $3.96 billion, which is a matter of great concern. And that is because of the increased repatriation, disinvestment, especially on the equity part, right? And the portfolio numbers are better. It is $6.6 billion, and that is why on a monthly level basis, the total foreign investment numbers in India is respectable. It has been maintained at a respectable level. So I hope, friends, that you have been able to get a better picture as to what the FDI situation in India is concerned. Summary, net very simple. FDI is losing strength in India from a brick and mortar and long-term investment, and there is a direct shift as far as FDI is concerned, or the foreign investment flows are concerned, on portfolio and therefore in stock market. And the repatriation is the key reason why our FDI numbers are decreasing, the net foreign direct investment numbers are decreasing. People are taking money out of India. Long-term investments are going out of India and getting shifted towards stock markets, FIIs. FIIs making stock market investments, which is a matter of concern, because we want brick and mortar investment. We don't want stock market, because the stock market investments do not stay long. They are more liquid. They can be taken out very easily, right? And we have to continuously keep bumping the stock market to make the interest in the foreign investment in the stock market so as to ensure that our total investment, our foreign exchange reserve situation does not drastically reduce. So friend, that's all in this video, and I hope that you understood, and I hope that you might have appreciated the situation. And this data I aggregated, and I'll keep aggregating this data in this form because this gives a very good picture rather than looking at the table. It does not throw any picture because you can see the trend here. Not only you can see the trend here, but you can see the ratios, because sometimes the trend numbers in absolute terms does not give the picture. The ratios become very, very important to look at how these numbers have been changing. Like for example, if you look at the ratio number from a monthly basis, you can see the significant increase of total investment inflows in India because of the numbers have changed because of the monthly numbers actually have shown a significant rise going forward. Okay, so friends, that's all in this video, and I hope that it made sense. And let me know in the comment section if you need any further information and insight. I will definitely come back to you with and reply to your comments. And next time I'll come back to you with a new video and a new topic. Thanks a lot for listening.